I saved my whole life, meticulously planning for a future of relaxation and well-deserved rest. Every penny was accounted for, every investment carefully considered, only to have the rules changed at the finish line. The rug pulled out from underfoot, leaving years of careful saving suddenly vulnerable. It's a betrayal of trust, a disruption of dreams carefully built over decades. This is the reality for millions of retirees, not a hypothetical scenario, but a tangible threat to their financial security. They gather in community centers, sharing stories of confusion and fear, seeking answers that seem increasingly elusive, blindsided by a new law, a law that seemingly appeared from nowhere, catching them completely off guard and unprepared. The shock is palpable, the disbelief profound. Passed quietly, the legislation is now shaking not just individual accounts but the very confidence in the system itself. The fine print, once a minor detail, now looms large, casting a shadow of uncertainty over their golden years. The financial foundations of American households, kitchen tables become war rooms, calculators become weapons against an unseen enemy, and the simple act of budgeting transforms into a desperate struggle for survival. What was supposed to be a secure retirement, a time to enjoy the fruits of their labor, to travel, to spend time with loved ones, has become a time of anxiety and confusion, a constant worry about making ends meet, a gnawing fear of outliving their savings, and a deep sense of betrayal by the very institutions they trusted. The law, hidden in a larger bill, buried beneath layers of bureaucratic jargon, directly targets senior citizens' income. It's a direct hit on their pensions, their Social Security benefits, and their hard-earned savings, leaving them scrambling to understand the implications. Many only learned of the change, not through official channels or transparent announcements, when IRS letters arrived, delivering the unwelcome news with cold, impersonal efficiency. Or news reports broke the story, adding to the confusion and sparking widespread panic. Suddenly, decades of careful planning seem fragile, vulnerable to the whims of legislative changes and unforeseen circumstances. The heart of the issue, a new way of taxing retirement income, a complex and confusing formula that leaves many feeling lost and overwhelmed. From Social Security, the bedrock of many retirees' financial stability, to pensions, the promised reward for years of dedicated service and savings. Every source of income is now under scrutiny, subject to a new set of rules that seem designed to punish those who prepared for the future. For those who followed the rules and saved diligently, sacrificing and planning for their later years, it feels like a penalty for doing the right thing. A cruel irony that undermines the very principles of responsible financial planning. Financial advisors are overwhelmed with calls, their phone lines are ringing off the hook as panicked retirees seek guidance and reassurance. Online forums are filled with fear and anger. The digital space becomes a sounding board for frustration, a place where seniors share their anxieties and search for solutions. Tonight, we'll break down what this law means, dissecting the complex language and revealing its true impact, hear from those affected, giving voice to the real-life stories of those struggling to cope, and explore how to navigate this new landscape. This isn't just about numbers. It's not just about spreadsheets and tax brackets. It's about real lives and real consequences. It's about the dreams deferred, the sacrifices made, and the futures now hanging in the balance. Understanding these changes is critical for anyone on a fixed income, for anyone who relies on their savings to make ends meet. The conversation is happening in homes across the country, in living rooms and kitchens, as families grapple with the implications of this unforeseen tax storm. The Retirement Income Realignment Act of 2025 was pitched as a fix for government finances. But its most controversial section redefines how retirees' unearned income is taxed. The law introduces a flat-rate retirement surcharge on top of existing taxes. Social Security, pensions, and withdrawals from 401, KKs, and IRAs are all affected. Roth accounts are mostly exempt, but most retirees rely on traditional, pre-tax savings. The surcharge kicks in at low income levels, hitting not just the wealthy but millions of middle-class retirees. The stated goal was fairness, but the result is a system many see as less just than before. The new rules mean few retirees are untouched. For many, the simplification has brought only higher taxes and confusion. The impact is broad, and the debate is just beginning. The biggest shock, and perhaps the most unsettling change for many retirees, is how Social Security benefits are now being taxed. This is a significant departure from previous policies. The old system, as many remember it, shielded lower-income retirees from these taxes, providing a crucial safety net. Now, however, a new, considerably lower income threshold means that the majority of recipients are now subject to paying a 10% surcharge on their benefits. This change impacts a large number of individuals. For individuals, the income threshold that triggers this tax is a mere $20,000 annually. And for couples filing jointly, that threshold is only slightly higher, at $30,000 per year. This means that millions of retirees who previously paid absolutely no tax on their Social Security benefits are now seeing a very direct and noticeable reduction in the amount of their monthly checks. The impact is immediate and tangible. For example, consider a retiree whose only source of income is Social Security, and that income is just slightly above $20,000 a year. That individual now faces this new tax burden, further straining their already tight budget. Lawmakers and policy experts claim that this change is absolutely necessary to ensure the long-term financial stability of the Social Security system. But for those living on fixed incomes, a 10% cut in their benefits can be absolutely devastating. It represents a significant loss of crucial funds. It's not just about abstract numbers on a tax form. It's about being able to afford essential medications, covering the costs of essential utilities like heating and electricity, and putting enough food, basic groceries, on the table. Many retirees see this new tax as a broken promise, a betrayal of the commitment made to them, essentially taxing what they firmly believed was an earned right, a benefit they paid into throughout their working lives. The emotional toll of this change is very real, and should not be underestimated, as retirees feel that the government has unfairly moved the goalposts, changing the rules of the game late in the day. This new law hits hardest, and disproportionately affects those individuals who rely most heavily on Social Security as their primary or sole source of income. For many vulnerable seniors, this tax represents a direct and significant blow to their overall financial security and well-being. The sense of betrayal and disappointment is widespread throughout the senior community. The law doesn't stop at Social Security. Pensions and withdrawals from 401(k)s and IRAs are now lumped together as consolidated retirement income. Any income above the new thresholds faces the 10% surcharge on top of regular taxes. Retired teachers, police officers, and factory workers now pay more, even on modest pensions. Withdrawals from traditional retirement accounts are hit especially hard. Retirees must choose, withdraw less, and tighten their budgets, or pay much higher taxes. The law penalizes diligent savers, undermining decades of careful planning. Most current retirees can't switch to Roth accounts now, they're stuck with the new rules. The result, a heavier burden on those who did everything right. Many are left questioning the wisdom of saving in traditional accounts. Let's take a moment to consider the real-world impact of these new tax laws. Meet David, a man whose story reflects the struggles of countless retirees across the nation. David is a 72-year-old retired factory worker residing in the heart of Pennsylvania. He spent his life contributing to the workforce, diligently saving for his golden years, and now finds himself facing unexpected financial challenges. Like many seniors, he relies on Social Security for a significant portion of his income. He gets $21,600 a year from Social Security, a sum that barely covers his essential living expenses. In addition to Social Security, David also receives $9,600 from a small pension, a testament to his years of hard work and dedication to his employer. When you combine his Social Security and pension income, it totals $31,200 annually. This amount, while seemingly substantial, is a modest income for a retiree trying to make ends meet in today's economy. Under the old tax law, David's tax bill was minimal, allowing him to manage his finances with relative ease and stability. Now, with the implementation of the new $20,000 threshold for taxation, David's financial landscape has drastically changed. Suddenly, $11,200 of his hard-earned income is now subject to the 10% surcharge, a burden he never anticipated during his retirement planning. This translates to a staggering $1,120 in new taxes that David is now obligated to pay each year. That's approximately $93 a month, a significant sum for someone living on a fixed income and carefully managing their budget. For David, that's money that would otherwise be allocated to essential needs, such as groceries, life-saving prescriptions, or the ever-increasing cost of gasoline to get to doctor's appointments. As a result, he now faces tough choices, forcing him to make difficult decisions about which necessities he can afford to sacrifice. he's left with the unenviable decision to either cut back on essential items or reluctantly dip into his limited savings, jeopardizing his long-term financial security. David isn't wealthy by any stretch of the imagination. He's a working-class retiree who dedicated his life to honest labor and diligently played by the rules, expecting a secure and stable retirement. Yet under this new law, he's treated the same as a millionaire, despite the vast disparity in their financial resources and circumstances. This effectively imposes a proportionally heavier burden on David, further straining his already limited financial resources. His frustration is real and deeply felt, stemming from the sense of injustice and unfairness. He feels betrayed by a system he trusted, a system that now seems to penalize him for his years of hard work and responsible financial planning. The new law fails to distinguish between modest, hard-working retirees like David and wealthy individuals who can easily absorb the increased tax burden. For David, the impact of this new tax law is immediate and severe, directly affecting his ability to afford basic necessities and maintain his standard of living. And sadly, David's story is far from unique. It's a common narrative shared by countless retirees across the country who are struggling to navigate the complexities of the new tax landscape. Now meet Susan and Robert, a married couple in Florida. Robert's pension is $30,000, Susan's is $15,000, and they get $35,000 from Social Security, $80,000 total. Under the new law, $50,000 of their income is subject to the 10% surcharge, an extra $5,000 in taxes. Their comfortable retirement is suddenly less secure. The annual cruise is canceled, and they're cutting back on hobbies and dining out. They saved diligently, but now feel penalized for their prudence. The law squeezes not just the poor, but the middle class. Susan and Robert already pay income tax. This new surcharge feels like double taxation. For them, it's about fairness as much as money. They believe the government moved the goalposts. Their story shows the law's broad impact. Even those who planned well are now paying the price. The sense of injustice is growing. Retirees' anger comes from a sense of betrayal. The old contract was clear: work hard, pay in, and enjoy a secure retirement. The new law rewrites that contract after the fact. Many feel they're being asked to fix a debt crisis they didn't create. The burden falls on those least able to adjust, the elderly on fixed incomes. The process felt rushed and secretive, with little warning or debate. Retirees woke up to find their futures changed overnight. Trust in politicians and the system has eroded. Unlike younger workers, retirees can't adjust their savings or go back to work. Their options are limited, and the impact is permanent. The feeling of powerlessness is perhaps the hardest part. For millions, the promise of a secure retirement has been broken. Despite the challenges, retirees do have options. The first step: seek professional financial and tax advice. Experts can help you calculate your new liability and find ways to minimize the impact. Managing withdrawals from retirement accounts is key. Staying below thresholds can reduce the surcharge. Consider using non-taxable sources for short-term needs. Review your investment portfolio. Shifting to qualified dividends or long-term capital gains may help. Converting some traditional IRA funds to a Roth IRA could be beneficial, but requires careful planning. Maximize deductions, like the additional standard deduction for those over 65 and medical expenses. Keep meticulous records and work closely with a tax preparer. Every dollar saved helps maintain your quality of life. The new law has changed retirement for millions, adding complexity and new burdens. The low thresholds and flat surcharge affect not just the wealthy, but the entire middle class. Stories like David's and Susan and Robert's show the real-world impact. The law is a reminder. Retirement rules can change at any time. The best defense is information and proactive planning. Seek professional advice, manage withdrawals, and maximize deductions. Stay informed and engaged in the political process. The rules aren't set in stone. Vigilance and advocacy are essential. With knowledge and action, retirees can regain some control. The promise of a secure retirement is worth fighting for.